Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends of the stock markets, also help you understand the stocks and the sectors that are buzzing in action today, and we will also get you the expert views as to how should you be approaching the markets right now. But first up, let's quickly see how the markets are trading at this point in time. Well, it's a good day for the markets. We are seeing some good returns coming about. Look at the Sensex, it's up by about 100 odd points, but it's inching towards those all-time high levels, 61,975 at this moment. The Nifty also hovering at 18,414 odd levels, 10 points uptick. So it's a flat with a little marginal gain that you can see. But because the markets are actually approaching those record levels, that's what the buoyancy is all about. And everybody is talking about how soon do we see that. And that's going to be the focus of our discussion also today. Let's talk about the sectors that are in focus in today's trading session. Well, if you see what's pulling the markets higher today, clearly it's the banks that is definitely helping the markets. PSU banks up by 1 odd percent. 0.5% uptick for the IT space, so that's another space that's helping the markets inch higher. Also, the autos marginally up. Financial services also slightly up in trade today. What's not performing is the FMCG stocks. They are down in trade. Also, the pharma and the metal pack, that's declining in trade. Metal pack clearly seeing some profit booking taking place, and so is the realty space, that's down in trade. But let's welcome our guest for today. Mr. Chandan Taparia joins in from Motilal Oswal Financial Services. He's an expert of technicals and derivatives. Welcome, sir, and thank you so much for taking the time out. Well, seems like we are on a strong footing as far as the markets are concerned. How soon do you see those record levels being approached?
Thank you, Sakshi. Thanks for having me. We have seen really good momentum in the market in last couple of weeks, and we were quite bullish. And every time we talked about index to heading towards 18,500 to lifetime high of 18,605, and we have rallied by 1,500 points, and we are near to the same. We believe that this momentum could continue into the Indian market. If you look at the price actions and price internal, your market is continuously making high rise, high lows. If I talk about the weekly chart, India VIX is continuously falling down. However, today it is spiked by around 6-7%, but overall from last 7 weeks it has corrected well. So falling volatility, increasing FI's long short ratio, stable put call ratios, and hold of the heavyweights counter clearly indicates that we are all set to head towards the new lifetime high. However, due to the weekly expiry, some call writing happens. Because of that, momentum is missing, and lower VIX is also the reason. But overall, we believe that 18,282 is likely to act as a support, and slowly we are heading towards 18,605 in the next week going forward. Talking about the Bank Nifty, that is comparatively outperforming, and we believe that SDFC twins could add the value to see the cheerful momentum to further heighten momentum in the Bank Nifty. So 43,000 in the Bank Nifty and 18,605, that is the new lifetime high in Nifty, are now going to be placed over the next week.
Okay, understood that. You know, if you have to tell all the investors as a strategy, how should they be approaching the markets? Where is that alpha going to come across when the markets are approaching these all-time high levels? Should one really stick to these banks, financial names? Is Nifty Bank going to really create alpha for them? What are you telling your clients?
Yeah, so first, when you talk about the investment assets class, equity is going to generate the alpha for you compared to other assets class, whether you talk about the gold, property, FD, and anything. So first, you
Right.
have to stay invested in equity, and that really rewarded well for the people who invested in last 2-3 years. Second, when you talk about sector in equity market as a whole, then I believe that banking counter are likely to do well. We have positive on the banking consumption, selective defense name. So Bank Nifty is likely to generate alpha comparatively. Nifty is still 200 points lower than its lifetime high, but Bank Nifty is every day hitting to the new lifetime high and outperformed well. Even if I look at the Y2D basis, year to date basis, your Nifty is up by around I can say around 6%, but at the same time, your Bank Nifty has generated alpha, and that is up by around 19 to 20%, and still we believe this outperformer index is likely to outperform. So Bank Nifty has potential to outperform Nifty, so you can continue to be with long side into the banking name. So in banking, you can continue to be with investment of SBI, ICICI Bank, HDFC Bank. These couple of counter are likely to generate alpha compared to the Bank Nifty and Nifty as a whole in this market.
Right, absolutely. Also, in terms of the various sectors, if I have to understand from you, where all do you see the momentum building up from here on? We have seen a year full of changes, rotation among the sectors. From here on, as the markets approach these new highs, where is the momentum really coming out from, and where is the outperformance coming in from?
Yes, actually, that is very interesting question, and I think everyone is looking for the same reply. So, if
Yes,
I look at the outperformance in the sector wise, I believe your banking will perform. That already we discussed that how Bank Nifty is positioned to
sure.
see the outperformance. Second, we believe that auto sector will do well. Auto has really done well in this year, up by around 20%. However, it has been consolidating from last 3 4 days, but major trend is positive. And we believe that here you have safety as well as the potential for the upside momentum. So we'll focus on selective auto name, especially when I talk about the TVS Motor or a counter like M&M. These stocks are well positioned to see the further uptick in the market with the market momentum. So auto is the one segment where we'll have positive view. We have positive on the defense name, whether you talk about HAL, BL, Cochin Shipyard, Mazagon Dock. So if you are looking for a stock specific, then definitely your position should be built here. Apart from auto, if you look at the index side, then IT is somehow provide you the better risk reward ratio. However, we have seen good recovery of around 10% in the Nifty IT, but still selective IT counter could do well. However,
Hmm.
even after recovery, we are down by around 22% in Nifty IT in this year. But I believe that counter like HCL Take or Infosys and TCS can provide some safety. In So I think one should select such name to be in this market like defense, banking, financials, selective auto, and these stocks have potential to generate alpha in this market.
Okay, understood that. Also wanted to ask you on the new age tech stocks as well. These stocks have actually gone through a very, very tough year. Most of these stocks are now facing these lock-in periods getting ended. So still a lot of volatility. Investors are confused about whether the companies are on the right track, even though we are seeing some promising signs, not all of them in the earnings of whatever we have come across, but there's still no clear sign as to where are they headed. But if you were to suggest to all the investors how to approach these new age tech stocks, what would you suggest to them?
So thanks for that nice question, Sakshi. So see, let me first tell that Indian market is outperforming the global markets. Your Nifty has outperformed the Dow. If you look at the internal part of the setup of the economy, we are outperforming and we are well positioned to see the good growth going forward. While still people are talking about the recession, inflation in the global markets. So whenever you have such kind of scenarios, your heavyweights are likely to outperform because fund manager and the mature investor have tendency to park their money into the heavyweights counter because they have tendency to see the less drawdown and more strength even at the time of consolidation, even at the time of market participation. So I believe that better to be in heavyweights counter, especially in the scenario when you are worried from the global market, and second when you are already seen the good run up in last couple of weeks. So that
Right.
is the reason that I stay positive and I stay invested in selective heavyweights rather than picking the new name from the e-commerce or the mid-cap name. So I'm sure the name you talked about e-commerce or new IT related e-commerce thing, then I'll avoid. I don't know whether you talked about Paytm or not. I'll wait
Yeah.
and watch further decline. I don't know whether you talked about Nika. So here some fashion and consumption is there. So those who are looking for long term, here you are getting some bargain hunting, can stay invested here. When you talk about Zomato, in this space, then I think some volatility could be there. So these are the three names when you talk about the new IT business and all. So I think Nika and Zomato could be some bargain hunting, but you should
Sure.
not invest more here. While Paytm and other name you should avoid, let them decline, let them get stability till them enjoy the benefit of being with heavyweights IT, financial, defense, and other name in the market.
Okay, we've discussed so far, Mr. Taparia, as to which are the spaces that may actually help build great returns going forward. How do you really approach these particular sectors? If I want to ask you, as we approach these high levels, is there a space? Is there a sector? Are there some particular stocks where one should absolutely abstain from, stay away from? If there is anything on the top of your mind, could you share that?
See, Sakshi, we always look at what to add rather than what to drop, because we believe that long term, if you look at the long term horizon, the future is quite positive in Indian market. We always look at for bargain hunting in the market rather than selecting something which we don't like. But yes, if you really ask me, we'll avoid mid cap, small cap name. We'll
Okay.
avoid few pharma name because we believe that even if market recover, it is going to be very tough for these stocks to perform well. So apart from selective financials, banking, defense, auto, FMCG, I'll avoid all other name. which are volatile. Even if you talk about the media names, I'm not going to pick them because they are highly volatile, not performing when market is performing. So it is very tough for these stocks to perform well, even if market consolidate or correct. So I'll avoid media, selective mid-cap name, selective stock which have not performed in this recent rally. So that is the advice going to be from my side in this scenario.
Okay, one last question to you. Your stock-specific recommendations as we approach these record highs and the moment that you believe that, these stocks could actually give great returns going forward.
Yeah, so positive on HL, expecting momentum toward 2750 kind of level. HL looks good. One can look at SDFC Bank. We are looking some consolidation breakout. 1580 is the support to see the rally towards 1700. So SDFC Bank, HAL, uh, IGL, Cummins, these are the couple of names where one should focus on the investment part.
Okay, understood that. Well, thank you so much, Mr. Taparia, for being with us and sharing all these wonderful insights with all our viewers about how to really approach the markets at this point in time when they're soaring high and approaching these all-time high levels. Where is it that the money will be made and where exactly does one need to be absolutely staying away from? At this point in time, the market's still holding up, 10 points up for the Nifty, about 85 points up for the Sensex also right here. We are seeing the momentum continuing to be strong as far as the banking space is concerned, especially the PSU banks. That is a space that's outperforming the markets overall. IT sector definitely supporting the markets. Banks, financials, defensives, IT select, IT stocks, select auto stocks is what Chandan also pointed out, where he is positive on going forward from here as well. And with that, we wrap up this edition, but do stay tuned on to Business Today TV for a whole lot more information on stock markets, the way the movement is being seen, and also stay tuned as to very soon we are going to be speaking with the top management of Global Health, the company that's made debut on the stock markets today, and a strong debut at that, to hear from the management as to what do they expect to do going forward from here. What can you as viewers, as especially potential investors, really want to know from the top management of the company? So stay tuned for that. Many thanks for tuning in for now.
From the makers of Aaj Tak and India Today, the undisputed leaders in Indian news,